Hello, this is Don DeBartolo, a senior broker with Daniels Trading in Chicago, and I'm also the publisher of the Trade Spotlight advisory service. Trade Spotlight is broken up into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Futures Spreads. This is Beyond the Spotlight, a video that spotlights two or three different markets that may become trading opportunities for the week ahead. The week is from Monday, February 25th, 2019. Please pause the video now and read the disclosures so that you understand the risks involved with futures and commodity options trading. Here's an example of what you can expect from the Trade Spotlight advisory service, and it's an email service directly to your inbox. This is the Trade Spotlight options version. There will be a timestamp so you know when the trade was sent out, a write-up on the trade, a link to the chart, the precise entry order, any margin requirement necessary, if it's an option contract, information like the delta and expiration date, and then the risk reward parameters. And this goes for futures, options, and the future spreads. Okay, let's jump into our first chart here. This is the June 2019 E-mini S&P, and I have a trend line drawn off going back to this low down here. That was that low put in on the 26th of December at 2,319 and a quarter, going all the way up to last week's trading session. So the market traded back up to this 28 even price level. This is about a 500-point move since the beginning of the year, and this level up here looks to be a solid resistance level. You can see I've drawn off three separate highs up near that 28.50 price level. So there's a chance the market trades into this area here, but then I'm looking for it to roll over and break this lower trend line for a short entry opportunity. You can see from the MACD here the uptrend is waning, and if you look at the stochastics, it looks to be in the over bought level at this time. Right now there's not much momentum to the downside, so would like to see that hook down before entering a short position, and that most likely would come on a break of this trend line here. Downside target would be a 50% Fibonacci retracement of this parabolic rally here. That price comes in at 2,563 even. Potential stop losses would go above last week's recent highs, the highest one being I believe it was 2802, 2802 and a half from the 21st, or let's see if the market again trades into this area first, because the stop loss would have to go above those recent session highs. Moving on to the next chart here, this is the June 2019 Euro currency, and this is a pulled out chart. This is going all the way back to December 2017 because I wanted to show all of these lows back in here. So coming back to recent data, we've got a big rectangle pattern here. The market slightly dipped below recently. As of last week, that lowest low was the 15th of February with a low of 113.49 and a half. Going back, the lowest low here was January 3rd, 2017, and that was 110.16 even, down in this level here. So what I'd be looking for with this particular chart is actually writing an option contract going all the way down to the 110 put option, so that clears all these recent lows, and looking to sell a put option approximately 36 points, which works out to be $450 in premium. The margin requirement for writing that option is $974, with the maintenance margin dropping to $885. With the Trade Spotlight options, anytime there's an option writing opportunity, typically it's accompanied by a long option to protect the position. that not only protects downside risk and the overall potential loss on a trade, but also reduces the margin requirement. So I would look at April options. Again, this is the June contract. This is the chart of the option that would be sold, but the option that would be purchased would be from April, and purchasing the same strike price, the 110 put. Right now that's going about 6 points or $75. So that cuts down on the profitability of the trade, looking at $375 per option, but the margin drops as well to $381 for initial margin and $346 for maintenance margin. So you can actually do two contracts. You can execute two contracts to make up the difference in lost premium, make a little bit more premium for about the same margin, and have that risk covered with a long option. Anytime I send out an option writing opportunity, I include a risk graph using the Option Source program, and I'll certainly include that in a write-up if there's a trade next week. The maximum loss appeared to be $1,200 with that protection in place, so it limits our downside exposure. And the last chart is the June 2019 10-year note. You can see I have a pennant formation drawn off on this chart. Over the past month, the contract has been making higher lows. So it set up a solid lower trend line support level. But you can see there's also resistance above as well with this trend line drawn off. The market failed to stay above the 123 even price level. You can see it was done on this one trading session here. This was the 3rd of January. I actually have a working order that was sent out via the Trade Spotlight Futures, but just putting this back on your radar, it was not filled. I'm looking to sell the contract only if it breaks this lower trend line. I want confirmation that the market is heading lower. You can see from the MACD down here the trend is waning, and the stochastics indicator is showing a potential shift in downside momentum. So would like to see this again hooked down to ensure that along with this trend line that indeed is a breakout to the downside. Stop loss is above these recent highs and this upper trend line. This high right up here where I have that red circle drawn off, that's where the stop loss was recommended to be placed. The high was 122.28 from the 31st of January, and the target is down at this 50% Fibonacci retracement. That price is 120.13. But to get the specifics, take a look at the Trade Spotlight advisory service, the email for the 10-year note, to know the precise entry, stop loss, and target. Okay, I put up my contact information. If you have any questions on the charts that I discussed today, or just in general, my local cell phone, toll free, and you can always email me directly at tradespotlight@danielstrading.com. If you're not a subscriber, I encourage you to do so. You can trial it for 90 days to make sure this is something that you like. You can just go to the Daniels Trading website, click on the Advisories tab at the top, and under the Technical Analysis Advisory, select Trade Spotlight. You can take a look at each segment, examples, questions that are answered, and subscribe. It's free to clients of mine and Daniels Trading. Otherwise, after 90 days, if you're still interested in receiving it, it's $99 a quarter. Thanks for taking the time to listen to me today. Happy trading.